In a world where jobs are how most people make money, one man, one desire, one challenge dares to break the mold. Welcome to the Old Dogs REI Network, where we don't work for money. Money works for us. Coming soon. Viewer discretion advised.
Welcome to the Old Dogs REI Network, where cash flow is king. Real estate investing, the means, so you can enjoy your retirement dreams. This is the show where we cut right to the chase. No sales pitch, no long monologues, just simple how-to real estate investing advice, so you can earn the passive income you need to enjoy your retirement today. And now, your host and chief old dog, Bill Manacero.
Welcome to the Old Dogs REI Network. I'm your host, Bill Manacero, and this is the show where 50-plussers and anyone else who wants to join us get solid, no sales pitch real estate investing advice to help generate real cash flow. This podcast airs twice weekly on Mondays and Fridays, and if you aren't already a subscriber, go to iTunes or Apple Podcast, type in Old Dogs, spelled D-A-W-G-S, find our podcast, and subscribe. Well, we have a great show for you today. We have a gentleman here who has a lot of experience in real estate and then a lot of offshoots from there. An amazing background and quite a life story to share with us today. And I'm talking about Jorge Newbery. And Jorge is a founder and CEO of American Homeowner Preservation, Inc., a parent company of AHP Servicing, a nationwide mortgage servicer. Also Pre-REO, the nation's leading online marketplace for the sale of non-performing mortgages from institutions to real estate investors. Also AHP Mortgage Direct, a nationwide mortgage originator, and AHP Title Insurance, Inc., a title insurance company. That's quite a load you got on your shoulders there. He is also partner in Activist Legal, a law firm facilitating default legal services nationwide. And he is the author of Burn Zones, Playing Life's Bad Hands, which chronicles his financial rise, collapse, and resurgence. Well, Jorge, welcome to the Old Dogs REI Network.
Thanks, Bill. Thanks for having me. I'm looking forward to the conversation.
Well, I am too. You have a great story to tell, and I think a lot of valuable experience that our listeners would really benefit from. So, we always start off with our guests just kind of, giving us your story, where you're from, where you grew up, and how you ended up where you are today. So if you don't mind, give us the rough details there.
Sure. Yes, I grew up in California, in Los Angeles, and I was there for 37 years. Highlights. Didn't go to college. I got a GED and got out of school. I had started a record company in my parents' garage, and we put out 8 albums of hardcore Southern California punk bands in the early 80s. So that was my first bigger business, and notable that one of those songs ended up on a Netflix movie a couple of months ago, which was kind of a blast from the past. After that, I decided to become a bike racer, and in '84 they had the Olympics in Los Angeles, and that inspired me to become a bike racer. In '88, I was in the Olympic trials for bike racing, and I was on a trade team and traveled around the country racing. But I needed to get a real job, and so I ended up. One of my teammates' girlfriends helped me get a job as a mortgage loan originator in 1990, and I was about 25, and I rose to the ranks. And a couple of years later, I started my own mortgage company, which is still in business after all this time. And that's kind of spawned a career. It was in the early 90s. There was a bit of a downturn in California. So I bought an apartment building of 4 units, and then I bought one of 19 and then 60, and it kind of grew from there. And what I would do is I'd buy the the most challenged properties I could find, the ones with the most opportunity to add value. And these I found that if I could turn them around, which is very hands-on in doing, if I could turn them around, then I could do very well, add value. And this asset that I brought when it was a liability, typically from a lender or bank as an REO, I added value, and by the time it was done, it was worth a lot more. And that was my MO, and that I did that for years. The last big property I bought in California was 298 units on Skid Row in Los Angeles, and I bought it. And you're from California, I believe, so you're going to relate to this pricing being just extraordinary. I bought 298 units for $850,000 in downtown Los Angeles.
Oh, gee whiz. That's crazy.
Just unheard of. But here's the story, and this will kind of give you a peek into how I was operating back then. The building itself had sold about 6 years before, more or less, for $4.5 million. $4.5 million. The property was in such bad condition that it had been targeted by the slum housing task force, and they actually put the owner in jail. So he sold it. He sold it for $2.5 million, and that owner went to jail too. So he sold it for $2 million to the guy I bought it from, and he also ended up in jail. So at this point, you're thinking, okay, it was kind of easy to do the math. You buy this building, you go to jail. And
it's kind of like Monopoly, but kind of like the reverse world there.
The real life version, not the good one.
Right.
But to me, I looked at it as a challenge. And to be clear, this property was broadly marketed for $850,000, and no one wanted to buy it. So I ended up buying it, and I remember before I bought it, I knew some of the inspectors from other buildings, from other renovations, and they told me, don't buy this building. You've done pretty well in these smaller projects. We're going to get adversarial here. But I went ahead and bought it. And then I had a meeting with those same inspectors, and they said 6 months. We can't selectively prosecute. So if you can get this thing done in 6 months, you're good. If not, we have no choice but to do what we did with the other owners. So each month, the inspectors would come by the property, and they'd be very encouraging. They say, hey, great job. I was making extraordinary progress. I was there every single day, very hands-on, turning this thing around. And so I thought I was doing pretty well. But I remember on December 31st, 1998, a friend of mine called and said, you're in the paper. And you know where this is going. I said, for what? And he said 38 criminal charges filed against Redondo Beach man. And so all these housing code violations they had charged me with. And so now I have to tell you, my heart really sank when I heard that. I was like, oh my God. Maybe I've taken one too many risks, one too big a risk. And I tried calling my attorney. I was like, what do I do? And I couldn't get a hold of him. It was New Year's Eve. I went the whole weekend not connecting with him. And on Monday, I did talk to him, told him what happened. And he said, let me talk to the city attorney. And he did. And the city attorney, he called me back and relayed what the city attorney said is, hey, your client's making great progress. However, we can't selectively prosecute. So we're open to a plea bargain. And so he said, you pay a $10,000 fine and you go on 3 years probation. And, now I envision the probation is like me every week showing up to some probation officer checking in. And I was like, oh no.
Ankle bracelet.
Monitoring. So all those flashed through my mind. But the good news is my attorney said, no, this is summary probation, which basically means that if you finish this building and you don't get into any other trouble, then after 3 years, it's over. So I don't have to check in or anything like that. So that was good. And it took me 11 more months. And I remember it was a few days before Thanksgiving in 1999. And there was one day when all the inspectors came through, plumbing, electrical, heating, and health, fire safety. They all went through on the same day, and it had to be a day that they could not find a single violation. And that day finally came in November 1999. So the first time anyone had got this building out of the slum housing task force, and it was a big success. I made over $1 million, and that was my big. It was a mixed blessing in that it emboldened me. It made me feel like I could succeed where others had failed, even multiple other people had failed, so that was, I guess, good, but it was also bad, as you'll hear the story. So I think it maybe overly emboldened me, because I went on a spree across the country, buying the most challenged, the profile was buy the biggest property that you can find. That's also the most challenged, and then then I'd apply the same strategy.
Wow.
Kansas City.
Oh my goodness.
I know I bought this thing on the courthouse steps for 1.6 million. And it fit the profile. Was just in very poor condition. There were 8 murders at the property in the prior year, and that was the profile. So no one else wanted to buy it. But I'll tell you, I renovated it, leased it up, and then I applied for a refinance, and Wells Fargo, they ended up appraising it for like $8.5 million. They gave me a loan of $5 million, which got me all my money back and then some. And I was like, oh, this. That was very encouraging to keep going.
Wow.
So that's the story. And it was happy up until a little after that, and then there's a sad ending to all this.
Okay.
Unfortunately, I kept buying these big buildings, and then I bought my biggest challenge ever. I bought one of the largest apartment complexes in the whole country. It was called Woodland Meadows. It was 1,100 units in one property, 54 acres, 122 buildings. It was almost like a mini city. And it was very well located right near Columbus, Ohio, right near the airport, backed into the highest income area in the city of Columbus. And then this was a low-income housing project, and it was nicknamed Uzi Alley, UZI for the gun,
right.
Because it was just completely out of control with gangs, drugs, prostitutes. It was in the news constantly because of all the problems at the property. So that was the profile. So I bought it, and I had some success, and the media was following this building very closely. I went around the usual strategy of renovating it. I moved into the property that garnered a headline or two. But one of the challenges, it was predominantly the tenants were minority, Hispanic, African American, and they had a security force, which was 12 armed, all white security force, and it seemed the way that I interpreted things was they were hurting more than they were helping. I mean, certainly they were doing what they could to keep order, but when something was out of line, they almost aggravated they escalated some of the situations, which could have been de-escalated. And to make matters worse, there was I remember walking into the security office one day, and I did a double take, and I realized they actually had a jail cell in the security office on the property. Which just was extraordinary. So the security would be out on the property. They'd make citizens arrests, bring the people, put them in our jail, and then call the regular police, who would then come and pick them up. And that was I think it perpetrated some of the problems we had at the property. So I made a move that I wasn't fully confident in, but I thought was the right thing. I laid off all the security people, and the media was predicting absolute bedlam, like this place is going to go completely out of control. But myself, the manager, and a couple of tenants started a community patrol, and we started patrolling the property on our own, all unarmed, and tried to keep order. And pretty soon, a few more residents joined in, and it was an interesting social experiment. In that, as I expected, the majority of the tenants there wanted just to have a pleasant, secure place to live. And there was a small minority of people there who were the troublemakers. And we had to evict the troublemakers and go all the way through the process and get them off the property. And the other thing that was challenging, so we did that. And the other thing that was challenging is that many a times there would be on street corners in our property, there'd be groups of maybe 20 predominantly African-American young men. And some tenants will call and say, hey, I have some visitors. They're kind of nervous to come in with all these people hanging out. And so we, as the community patrol, we go up to them and say, hey, can you, you got to move, you got to break this up and move. And they would usually move, but they would move like 2 blocks away. So they'd still be on the property. So it really didn't help. But one of the things that we heard constantly from these young men was, hey, give me a job. And, at first it just slid off, in one ear and out the other. And we didn't really hear it. But then one day I remember thinking, well, why don't we give them jobs? We were spending millions of dollars in renovations on the property. And, the contractors would come in from the suburbs, do the work, and take their pay back to the suburbs. Why couldn't we spend some of that money on go into the families, to these young men's families, if they joined the crews? And so we set up, we started telling these young men that, hey, if you, and women, that, hey, we started this program, it's on the community center, and if you show up every day on time for 2 weeks, we'll guarantee you get a job. And the first time we did it, like 5 people went through the program, but then they all got jobs, and they'd be like apprentices on construction crews, labor, stuff like that, demo. And so, but word got out, hey, they really got jobs. So then within a couple months, we had like 50 people every class going through, and we were giving them jobs, and they were by and large doing good work. During those classes, different contractors would come in and talk about different trades and teach them, and people were interested in different roles. And it wasn't all successful, but a majority of the program was successful. And in the end of it, we probably had 200 people who ended up not just being on the construction crews, but they would also be leasing agents. They would also be maintenance, landscaping, different roles at the property like that. And that made the headlines there. It was really because accompanying all that was a drop in crime that was more than 50% within 6 months, just a dramatic turnaround of the property, which I attributed in large part to that program. Because now when, someone's try to tag a building, hey, I just painted that, you can't do that. So it created a sense of belonging and ownership amongst the tenants. And it was actually an extraordinary experience to be a part of. And it really was something that I think changed a lot of lives. A lot of those young men, the companies they started, I remember one gentleman started a landscaping company. He was working at Woodland Meadows, but then he went out on his own. And I remember he told me that Arby's would not hire him. A lot of them had criminal records, so they couldn't get regular jobs generally. And I remember he told me he went to Walmart, he went to McDonald's, Arby's. No one would hire him with his record. But now that he was a landscaper, as an independent contractor, he went to Arby's and they gave him a contract to do their landscaping, even though he still had the same criminal record. So some of those young men, their businesses are still around 20 plus years later. So it's been, and I still keep in touch with a few of them. It's really been transformative for some lives, that whole experience and that whole program. So that just worked out great.
Wow. Well, but you said there's a bad ending.
There is a bad, okay. It's a bad ending. So after about 2 years, we had the renovation done, we had the lease up done, and the property was truly transformed. I mentioned that it was near the airport, and I remember there was a flight attendant from Southwest Airlines who came out and rented an apartment, and she would have never done it when it was Uzi Alley. And now Uzi Alley was dead. It was back to Woodland Meadows, and it had a fresh start, and it really was a transformed property. And but a couple months after the lease up was completed, we the property got hit by an ice storm, which was the largest federally declared disaster in Ohio history. And it just devastated our property. And it triggered an extraordinary sequence of events in which I lost everything and ended up $26 million in debt. And so after it happened, we were well insured. We had over $50 million in insurance, and we filed a claim, but the insurance company promptly denied the claim. And one thing I didn't know at the time is if you have a really, really big insurance claim, which we did, then the insurance company's strategies is sometimes, and maybe often, to deny the claim, make you sue, and then eventually settle. But by the time you settle, or in my case, I was so financially exhausted that you settle at a big discount, and they end up saving some money, which is exactly what played out here. I made a couple of big mistakes. The first one was when the insurance company denied the claim, I went and met with an attorney, and the attorney said, hey, they're eventually going to pay this thing, but they're going to make you sue. And so we promptly, but within weeks of the storm happening, we had a lawsuit filed against the insurance company. And then I made two big mistakes in particular, several, but two big ones. The first one was hearing those words and being ever the optimist. I said, okay, let me take out loans on my other properties. I had about 4,000 units at this point around the country. Let me take out loans on my other properties and use that money towards fixing up Woodland Meadows. Once I get the insurance claim, then I can pay off all these loans at the other properties. And so that was mistake number one, because by the summer I was out of money, couldn't borrow anymore, and the property was nowhere near completed. And so what happened next is the city, the mayor's office summoned me, and this was, again, made the headlines, summoned me to City Hall, and they asked me to bring financials, rent rolls, different things on the property. And when I got there, they suggested that they would support me vacating the property and moving the tax credits and the Section 8 contract that I had on the property, moving all that to any other property that I could find in the city of Columbus. And then the city would take over this property. And I said, no, I really want to, I had a big impact at this property. I really wanted to make this one work, and which was was the wrong answer. So that's what I did. But the city, I hadn't fully realized that if I didn't cooperatively go along with their suggestion, then they were going to become aggressive in getting rid of this complex. So they followed that meeting a few months later with evacuation notices. I mean, they came out to the property and issued 3-day notices to vacate. And they said the reason for this is that they had discovered a construction defect by a prior owner, which had rendered all buildings subject to imminent collapse. Now,
what?
Exactly. These buildings have been there since, I think, the 40s or 50s. But they said, well, because all the drywall had been pulled out, when the buildings flooded, they exposed this construction shortcut. So what I did is I called my attorney, and we went to court, and we requested temporary restraining orders against the city from executing on their evacuation. And again, to show up, all the news media is there, and we go in front of the judge, and I hired an engineer who inspected the buildings and came in with his engineer's report, which stated that the buildings were not subject to imminent collapse. The city was there, and the judge was, well, what does your engineer say? And they said, well, we don't have an engineer. They just look like they're subject to imminent collapse. So the temporary restraining orders were granted. So the city could not evacuate the property. And in fact, the court said, what we're going to do is we're going to put together a 6-month plan to get this all fixed up, and we're going to appoint a court monitor who will be at your construction meetings every week and will monitor the progress and report back to the court. So I told my attorney as we left court, I said, call the insurance company, get as much money as you can, and then let's be done. And this is our opening to get this thing over with. So the insurance company settled for $32 million, which was sounds like a lot of money, because it is a huge amount of money. However, the damage far exceeded $32 million. But I took I took it, and we started working again on the property. I had about 200 people a day working at the property, but the city was not done. The city had a meeting with HUD, and HUD came out to the property a few weeks later and said that, hey, there's some damage at the property. You have 30 days to fix it. And if you don't, we'll terminate your HUD contracts. And so I contacted HUD and said, hey, here's the court plan that we entered into that gave me 6 months. There's no way I can get all this done in 30 days. And they were unresponsive. So I went to the court in front of the judge and said, hey, we're doing the work. You've got back reports saying we're ahead of schedule, but HUD is saying I have 30 days to do this work. And so the judge summoned HUD to court. And HUD, so I remember we were all at a court hearing, and then we got notice from HUD saying that we're a federal agency. We're not bound by a municipal court. We're not showing up. And on the 30th day, HUD showed up at the property, and they said they were there for about 5 minutes, and they said, you're not done. And I knew I wasn't done. And they issued a notice which terminated our contract, and that was the end. I lasted about 6 more months there, but 6 months later, the property was completely vacant, and I ended up with losing not only Woodland Meadows to the city, because the city now owns that property, and to this day they still own it. So they played their hand and they won, and I lost. And not only did I lose that, I lost just about everything else. And that was a story, a terrible, really a life-changing one, because I went from working really hard to turn projects into successes. And with this one, I think, I always went things kind of as from my bike racing days, I went into everything with kind of a tunnel vision pursuit of a goal. And most of my life, that worked out to my benefit. In this situation, I had a tunnel vision which didn't allow me to consider the city's offer, didn't allow me to consider maybe not rebuilding the property until the insurance company had settled. Almost any other path that I took other than the one I did, my mind, looking back, with 20/20 vision, would have resulted in a better outcome than what happened. But that's what happened, and I'll tell you, it was humbling. I felt I had failed. And very publicly, I was ashamed. I felt feelings of regret, of despair, of where did I go wrong? What could I have done differently? I played out things tons of times in my mind, even though I kept telling myself not to. So it was a very challenging period of my life. And I tried to rebuild. I said, well, I can build it again. But at this point, my credit was so wrecked. I had millions of dollars in judgments against me. No one would finance me. No one would partner with me. So it really, it was just an extraordinary run of success, with a short period of failure at the end, which undid everything. And that was it. That's the story of the rise and absolute colossal failure.
Wow. That story is, it's unbelievable. It's the fact that you had worked so hard to get to that point. Not only were you working hard, but you were, doing good things in the community. And it seems like just a political power play, and that you got caught up in, but one that totally took you out of the picture, which is just, it's unconscionable. That's crazy. Well, obviously you you pulled out of it because you are, very successful today, and you have a lot of other things going on. Where did the turnaround happen?
So that all happened by 2006. The storm happened in Christmas Eve 2004. I'm sorry, yeah, 2004. So 2005, I tried to rebuild. 2006 was a disaster. That's where I actually moved out. I was one of the last people to move out of the property. But 2006, and this is while everyone else was doing great with real estate, and I was just absolutely doing terribly. But 2007, I started hearing about families across the country that were struggling with foreclosure, or I should say the forecast of families across the country struggling with foreclosure. And I realized that all the experience that I'd gone through was what everyone else was about to, or not everyone else, but these millions of families were about to go through in terms of, even though I started out owning more and owing a lot more than most people, that was by the end, a family that has most of their net worth tied up in their real estate or their primary residence. To lose that to foreclosure, we all kind of ended up in the same place, which is broke. So I thought, hey, this is something that I can use my experience as an overwhelmed debtor to help these families. So I started a nonprofit in 2008 called American Homeowner Preservation. And the mission was to help families at risk of foreclosure. And we opened up a tiny office in Cincinnati. It was myself and two other people. And we had thousands of families come to us for help. 2008, 2009 was the beginning of just the housing crisis. And thousands came to us, and we thought we could advocate on their behalf with servicers and mortgage holders, and that we would be able to, the goal was to create consensual solutions that were beneficial for everybody, the lender and the homeowner. But we did not receive a very good response from the servicers and lenders. Repeatedly, we'd see them refuse offers that kept the families in their homes. And most of these families owed $100,000 on a home that had dropped in value to $50,000. And instead of finding a way to keep the family in the home, the lenders would foreclose, kick the family out. The home would be vandalized oftentimes and strip anything of value, the copper, anything of value be stripped out of the property. And then they'd end up selling it for $25,000 or $30,000, which seemed like value destruction to us. So we thought, but that's what was happening, and it just repeatedly that would happen, and we'd go back and forth with the lender for months, sometimes over a year, and at the end they say, "Oh, denied," and by the way, it goes to sale next week. And this just happened over and over. And finally, we said, "This is not working," because we only helped about 10% of the families that came to us. So we came up with another plan. We pivoted and we said, hey, we're going to become a for-profit, and we're going to start buying the defaulted mortgages from banks. And it was, whereas it was difficult to get a consensual solution on one loan when we went to a bank and said, hey, this family owes 100, the home's only worth 50, we want to agree to some resolution to keep the family in the homes, there was very little interest. But if we go and try to buy that same loan, they'd probably sell it to us for 20 grand. If we did it in pools, we'd have to buy a lot of loans at the same time, but that's what we did. So we started buying loans, and we could buy that loan where somebody owes 100, it's worth 50. I could buy that loan for 20. Once I owned the loan, once AHP owned the loan, we could do whatever we wanted with it. We could modify it. We could reduce the principal, forgive some of the delinquency, reduce the payment, and that's what we did. We buy them at so cheap that the discount, we could share that with the family and still make a good return for our investors. And that was a model that really worked. In the last decade, we bought more than 10,000 mortgages, and the primary solution was always to keep the family in their homes if they want to stay. And one surprise was, a lot of times we buy these loans, the families had already moved out or they didn't want to stay. But there was a good, thousands of families that were able to keep in their homes. And so it fulfilled our social mission. Even though we're for-profit now, we still had a social mission and also generated good returns. So that's been our what we've done for the last more than a decade. And HP has evolved as there were less opportunities. as we got further from the financial crisis, there were less opportunities to buy defaulted mortgages at attractive prices. So we've evolved into a national mortgage servicer, a title insurance company, a pre-REO, which is a platform where institutions can sell defaulted notes on a one-off basis to investors. We've also founded a national mortgage originator, which focuses on originating loans as small as $5,000 mortgages, in order to provide mortgage capital that's affordable into the most challenged neighborhoods in our country. So that's everything we do still has a social component to it, but also is for profit, and that's what we've done. And it's I used to like owning all these buildings across the country and being very hands-on. Right now, I sit behind a desk every day and can still have an impact, but I don't have to travel to properties very much anymore. So that's the difference. I mean, notes is what it's all paper. You can sit behind a computer screen and monitor your investments and get reports from the servicer, and if it's in foreclosure, from a foreclosure law firm. And that's been a good transition as I've gotten over 50. I don't have to travel so much. I now have two boys. I'm 56 and I have two twin boys who turn 2 years old next month.
Wow.
My wife and I started very late. My life was kind of postponed in some respects by my financial challenges, but on a very happy ending, I'm now married with two young sons, and that has my over 50 is now. I did my really hands-on real estate investing was when I was younger, and now it's more note investing, which is very similar to real estate investing, except a little less in the field work. But it's that's the journey.
That's fascinating, man. That's really fascinating, and it's great that you stuck to your guns, and to continue to help people that didn't have anybody out there batting for them, and that's awesome. And it's really interesting too, because I have a show I do on Fridays called Fun Fact Fridays, and I just did a piece on 9 companies that were great investments for unaccredited investors, and your company was one of them. And
nice.
Yeah,
Nice.
it was listed. This is a great place where people can come in. You've got a platform, and people can invest at reasonable amounts of money, and to be able to still get the benefits of real estate investing without the headaches of landlordism and all of that. So, it was a trip when I saw your bio. I go, wow, this is this company. Yeah, it was the first time I'd heard about it, and to hear the story of how it came about now is just fascinating. Mm-hmm. And how do real estate investors get involved with your company as an investor?
Sure. 2 ways. Right now, we have 2 open funds. We have pre-REO, which again is a platform where we sell notes to investors on a one-off basis, and these come straight from institutions. And that is, you can go to prereo.com. You can actually buy notes if you wanted to try that. You can also invest in the Regulation A Plus fund, which allows accredited, as you mentioned, accredited and non-accredited investors. We have a minimum investment of $100, so it's very accessible. The big pluses of Regulation A Plus is that we can accept accredited and non-accredited investors, and they can start with as little as $100. So it really is a very accessible investment. And due to our we've actually had, kind of the vision was that if we can help a family, save them from foreclosure, and then one day, if they get back on their feet, they can invest, which will help another family in the future who's going through the same experience. And we've actually had that. We've actually had families who we've helped in foreclosure come back and become investors, which is just thrilling to play a role in a family's financial transformation.
That's awesome. What kind of returns are people getting?
Sure. Right now we have pre-REO and AHP titles, the other fund, the first 9% goes to investors.
Mm-hmm. That's great.
So it's pretty passive investment. It's something that still generates a good return.
And how long are the funds tied up for?
For up to 5 years, we do offer early redemption. That if you need the money back early, if you need it back in the first year, you can request it, and we'll make our best efforts to return it. But your return goes from 9 to 7. If you do it in the second year, it goes from 9 to 8. If you keep the money invested for 2 years or more, you can redeem and still keep the full 9%. We've offered this since 2016. And we were always able to process redemptions within 30 days. I'll tell you, when COVID hit, we fell behind. That was the first time we ever fell behind on redemptions because everyone was asking for the money back at once. So it's not something you can say, hey, there's no guarantee it'll be back in 30 days. But in general, history has been that we've been able to return it within 30 days, barring some national pandemic.
That's very cool. And how do people, link up? Do you have a website where they go to for this?
Sure. Yeah, they go to prereo.com. There's a page where you can go for the crowdfunding. There's also, if you go to AHP Title, the same thing, a page where you can click on it and become an investor. And the whole process takes just a few minutes. It's a very fast, streamlined process.
God, that's great. It sounds like a great investment vehicle, as well as something that's doing good for people, and that's rare to find. I mean, that's awesome. Wow. So what are sort of your plans for the long term here? Are you looking to growing your companies more? Are you looking at actually take a step back and enjoying fatherhood more? Where's your head at there?
Yeah, sure. It's both. I've learned one thing that was throughout most of my career, I was very much a hands-on entrepreneur, which is, doing kind of the thought that you can do everything better yourself, which is not the way you grow a company. And so I was a bit of a micromanager, but I've learned, even though I still have those tendencies, I've learned to restrain myself and surround myself with the best people I can find, and the best people the best fits for the organization. So we've grown, I think right now, between all the companies, we have about 120 employees. But I do have key people in different roles that take a big load off of me and run the company. Now, I'm still very, very involved in the operation, but over time, I hope that I be less and less involved in the kind of day-to-day and more on the strategic. And the goal of all this is there's a downturn coming. I think we're already starting to see the evidence of that. How the extent of it, I don't think anyone knows that yet. But there is a downturn coming, which will present an extraordinary opportunity for our businesses to grow. There'll be another, once again, a big need. There's always a need, but an increased need for the services that we offer, which we hope will help us gain market share, help us build our revenue, and help us help more people. And then with the goal of by the time I turn 60, which is in 2025, the vision is that I can roll up all the companies and get them listed on the New York Stock Exchange. That is the goal. And if I do that by my birthday of when I turn 60 in 2025, October 2025, then that's at the same time my kids start kindergarten. So I could I maybe have a little more time. I can walk them to school each day and things like that, which is really it's been transformative to have my boys, and it really has made me, and I think I hear from others, but it really makes your priorities become change. Business is still a big priority, but families become and it should be an even bigger one, and it is. But until I had the kids, it was tough to bounce to have that frame of mind as set as it is now. I really just relish my time with the kids, and I'm really looking forward to guiding them as they grow up.
Oh, that's so great. Well, I mean, it looks like you got your priorities straight there. That's awesome. That is really awesome. And everything's based in Chicago area, right?
Yeah, majority of our operation is based in Chicago. Through COVID, we hired a lot of people remotely, and we have a good chunk of our workforce that's remote, scattered across the country, kind of wherever we could find talent. And that's continued now that COVID's by and large passed. We still have a lot of remote employees, and we've learned to manage them pretty well. I mean, one of the big benefits is that we can really hire talent at this point from anywhere in the country, and they could be part of the team. Before COVID, people would have to move to Chicago if they weren't nearby, and so that's really been a positive change, I think, because we have attracted some very strong talent. That's just clear across the country sometimes.
Oh, that's great. Yeah, so many companies moved into that mode, and there's quite a few we've talked to here that have stayed in that mode because it's actually worked for them. I know it's got to be a bear to manage, but at the same time, the quality of talent you can get when you're not restricted geographically is pretty phenomenal. So
yeah, absolutely agreed.
Well, that's great. Wow. Well, what a great story. I mean, just amazing. What you've done, what you've accomplished. How you survived through these ordeals that most people. I know that would be really tough to be able to turn around but it sounds like some good stuff happened there. You have a book too, right, that tells your whole story, and we're going to have a link to that in our show notes and our newsletter. I'd love to go ahead and make that available to everybody.
I appreciate that. Yeah, it's Burn Zones. It's on Amazon and Barnes and Noble. It's I tell you, it started out as an explanation letter to potential investors who would read stories about all my judgments, my bad credit, and all the challenges that I had over the Meadows. And I had to tell my part of the story, and that's how it started. And it just grew from like an explanation letter to a whole book about my life, and kind of tells the whole story of how I made millions and millions of dollars in real estate and how I lost it all. And then the beginnings of how I recovered from all that.
Wow. Well, I'm sure there's folks that would love to find out more about you and what you do, as well as the book, which I think will be a great reference. Is what website or what's sort of the best way for folks to do that, or to contact you if they want to get involved with you?
Yeah, if they go to either prereo.com, so prereo.com, or ahptitle.com, either of those will get you in contact with our company and with me. And I'd love to hear from your listeners, and love to find ways to work together.
Awesome. Well, I can't thank you enough, Jorge, for being on and for joining us. It's been great. Just an amazing story. Just wow. But I love to see happy endings, and it sounds like that's what's going on now, which is real exciting.
Yeah, I appreciate that. It's been quite a ride, but learn from the challenging parts of life, and then to maximize the happy parts of life. And it's been it's been quite a ride, but one that's been rewarding, and something hopefully experiences just like my dad shared different experiences with me. I'm looking forward to doing that with my children and with others too. But it's hopefully lessons can be learned from both the good and the tough parts.
Wow. Awesome. Well, thanks again for joining us. And I also want to thank all our Old Dog listeners out there for joining us today. I know there's a lot of other things you could be doing right now, but the fact that you've taken the time to join us means a lot, and we really appreciate it. Now, please note everything that Jorge talked about today will be outlined in detail in our show notes at the Old Dogs website at olddogsreinetwork.com /blog. You're going to look for the episode with Jorge Newbery. Remember, cash flow is king and real estate investing the means. Until next time, keep moving forward, and may God bless.
Thank you very much for visiting the Old Dogs REI Network. We would greatly appreciate if you would stop by iTunes and let us know what you think of the show. We would love if you could subscribe to the podcast, give us a 5-star rating, and write a review. The more ratings and reviews we receive, the more visible the podcast will be to others. Thank you.